portfolio management. Not understanding this one thing can cause a lot of difficulties in your journey. And what you have to understand unequivocally is that no matter how good your edge is, your system or your strategy is, you are going to face losing streaks at certain points during your journey. And it's how you handle those losing streaks that make all the difference. Okay? So what happens for the average investor is that they have a system and they're using it and they're having periods of good performance. But then what happens is that they experience, as I said, these losing streaks. And they lose confidence and they fall into all the gambits of emotions and emotional decision making. And it seems to make sense because as humans we have a genetic predisposition towards short-term survival. Everything is about the short term. If you've ever had a bad day and you think about that and you remember that time and you think your world was over, that was just one day in your life. Same principle applies in investing. So what does the professional do when they are experiencing a losing streak? They appreciate the mathematical logic behind it. So what do I mean by that? Well, let's take it out of the context of investing. If you were to flip a coin, an unbiased coin, 50,000 times, you would end up with a streak of 15 heads or tails in a row from an unbiased coin. So that's the probabilities. But it's hard for us as human beings to truly appreciate and understand that because it's so contrasted to the way that we were designed. We were designed for another time, another place, 6-7 million years ago. And guess what? That brain has not changed. It's the same brain as we had 6 or 7 million years ago on the African savannas. And when you bring that brain into investing, unless it's trained, it's going to create an absolute disaster. So what happens with most investors when they are experiencing these runs of losing streaks? They doubt their system, they start questioning their edge, but more importantly, they fall into the emotional gambits. So they fall into impulse, they fall into revenge. Okay? Imagine the person's taken 4 or 5 losses in a row, 4 or 5 investments that haven't worked out. Yeah? And then they start chasing to make their money back. They start coming out of their plan, not following their rules. Okay? In investing, it's not uncommon for certain systems or average systems to experience 20, if not 25 losses in a row. That can happen. It's not nice, but I'm not glossing over the reality of it. That's what it is. And in my view, you have to be able to endure financial pain to be a successful investor. So what is usually comfortable to do is the wrong thing to do. And the thing that is uncomfortable to do is the right thing to do. It's quite paradoxical in that sense. And what you have to understand is that if you look at performances of portfolio managers, track records, who have got 25 or 30 years of track records, what you will see is that they've endured months and months of losses. So 4 or 5 consecutive losing months in a year. And you would think that someone who is managing millions or billions of dollars, how they could possibly get away with having periods of time or having 5 consecutive losses, 5 consecutive losing months, and yet they make millions and billions over time, and they keep reaching new equity highs. Why? Because they appreciate and understand the mathematical logic behind what they're doing. Average investors, they don't understand the logic. They sit there, they wallow, they think, 4, 5, 6 losses in a row, the edge is broken, the strategy is broken. If you're following your plan, if you're following your rules, that's just down to probabilities. If you're breaking your rules and you're falling into the emotional gambits and incurring further losses as a result of a normal losing streak, then yeah, you've got a problem. Okay?